This is an update on Fetch, and it's currently trading at 66 cents, 0.666. That's the devil's number. Hopefully that changes very soon. So why am I doing all these video updates at the weekend? This is the fifth one that I've done today, and I promised you that I'd go through all of your chart requests. I'm nearly getting through them, but you keep hitting them back at me, so you're tiring me out a little bit, but I'm going to have a bit of a break after the next video. Right, 0.66. Why am I doing all these videos at the weekend? It is the time for preparation at the weekend. The volume comes into the market on Monday, on Tuesday. The volume gets moved into the market when the institutions, when the hedge funds, when the smart money decide to move the market. When does the market move on the weekend? That's when retail are filling in. That's when people have hype behind the market that have got money, that have got spare money because of interest rate reductions, because of the macro events allow them to have more money, because there's more positive news, and because there's more belief that this technology that we all love, that we call crypto, is going to completely change the world. Then the retailer come in, then you start seeing the moves at the weekend. But until then, it's time for preparation. And we are on the verge of a big breakout on Fetch that we are going to talk about. Hopefully it's going to be tomorrow, but we're going to look into more recent price action first and talk about this one thing, the golden cross. So we had a golden cross, and we talked about in the previous video what a good golden cross is and what a bad golden cross is. Now you've got a good golden cross and a bad golden cross. The bad golden cross is when it's crossing and the momentum is moving down. Momentum is moving down and price action is underneath the moving averages. A good golden cross is the opposite, when you're moving up and then the 50 crosses above, and then price action breaks through and holds this as support. So that is what we're waiting for. It doesn't mean that it's invalidated. It means that we just need to get above there. Now, the thing that we need to do in the short term, this is really recent price action, because we had the big Jackson Hole event, we had the big speech, and other cryptos are coming back down and potentially retesting that area of support, potentially double bottoming. Now, the 200 moving average is set at 67 cents. By the end of the day, I want the 200 moving average to be completely held. So I'm expecting this candle not to go below the 200 moving average. Otherwise, tomorrow you could expect further downside. So this is what we're looking for in the short term, 67 cents. That needs to hold today. What about the longer term? Right, we need ultimately price action to get above both of these moving averages. So if we hold the 200 moving average today and then we get a pump up above the 50, then you'll start seeing momentum start changing as far as this is concerned, and you'll start seeing that flow up, and then price above there, holding these levels as support, making swings to the upside. That's what we're preparing for. It hasn't happened yet. So the next thing we're going to do is, this is the higher time frame. We're going to stick in a trend line, because this trend line is the trend line that's ultimately going to tell us who really has got control, because this is a big trend line. This goes all the way back to March 2024. It went all the way to its high, $3.45 here. So we understand that we need to reclaim the 50 moving average. We need to break trend. And the next thing we need to do is take out this lower high. That's sat at 84 cents. So if we take out 84 cents and we get a full bodied candle, which closes above 84 cents, that's signaling that there's going to be a shift. And then we're likely to put in a higher low, just like this. Breaking, reclaiming this previous resistance as support, holding the moving averages, and then moving to the upside. So two things have happened here. We've taken out that lower high, we've put in a new higher high, we've put in a higher low, we've reclaimed these moving averages, and we've broke, there's three things, we've broke this major trend line. So that's ultimately how you prepare and how we're looking for the next move before it's actually happened. Once you break above the 50, that's a strong indication that you're going to break trend. So we are just coming from an oversold position. This is the daily, this is the higher time frame. So we've got enough momentum to be able to push up towards the upside and take out that lower high. That's what we want, and that's what we're looking for. Right, what we're going to do next is look at projections and resistance levels. Remember, support and resistance is king. So we get rid of this, and then we're going to stick in our Fibonacci from the swing high to the swing low, and then that's going to give us some indications. Now, we talk about it time and time again, these magic numbers. Look how they're respected. Resistance, you've got support, then it falls as resistance, and then it's resistance, and then it's support, then it's resistance. That's the 38.2% retracement. So that is $1.53. Once you break trend, expect that to be the next resistance barrier. So if you did break, come back down, held this area of support after you've taken out the higher low, then you would expect a pullback here, a new higher low, and then a push up to the 618. So that's how you're breaking levels and breaking levels and breaking levels. So we need to reclaim resistance to flip support. That's what we're looking for. And that's how you can play the moves to the upside. Now, projections. This is just using Fibonacci. So I'm not just guessing, I'm not speculating. I'm just giving you Fibonacci numbers that are usually sticking points that you'd expect to be sticking points going forward in the future. So if we put in a new high, expect it to get a reaction at these points. These points are the 1.618 and the 1.272. So we just add them to the chart and then we zoom out and then we look. You've got your 1272, $4.36, $4.34, should I say? You've got your 1618, $5.42. We can even stick in the 2618, guys. This is really shooting for the moon. 2618, all the way up here, $8.57. Am I preparing for that? No, but it is a Fibonacci number. So that's how you prepare for it. It's all the way down here, understanding one thing. It is a game of probabilities. We need to understand when we've got the highest probability of making a move, and to get the highest probability of making the move, we need to understand who's got momentum. We're still in this trend line. We could come back down. We could try and test this level. We could test this level. We could test this level. But ultimately, once you've got the breakout and you've reclaimed a lower high, that's showing there's a shift and there's a signal. We've got enough power to start making higher highs and higher lows. So if you did enjoy this video, I've got one more video to watch. What did I do before, guys? If you haven't watched the Pepe video, if you haven't watched the Cadena video, if you haven't watched the Theta video, if you haven't watched the ICP video, go back and watch those, because it is all about preparation for the big move going into tomorrow. And if we start getting a market move going into tomorrow, it's all about making sure that you understand exactly what's happened before it's happened, what's likely to happen, how to prepare for the upside, how to prepare for the downside, understanding exactly what your risk to reward is. So make sure you stay safe, guys. This is the channel for development. This is the channel for you understanding how to read a price chart. And my goal is to teach you every single thing that I know. And I'm constantly developing myself on my journey every single day. And I urge each and every single one of you to take 10 minutes out of your day to do the self-development. And this counts as self-development, guys. Understanding what is resistance, what is support, where you're likely to get a reaction, how you can take advantage of that, and how you can get the most high probability move out of anything by just adding in the things that you understand, where you know that there's been a reaction there in the past. So you would expect a reaction going forward in the future. So don't forget, join the Discord group. It is completely free. Follow me on X at crypto4bullseye. That's the number 4. And then I'm going to start doing exclusive videos on X very shortly. So make sure that you do follow me on there, and I'll see you guys in the next one.